If you look to the situation nowadays, still concentrated short position in silver and in gold, especially in silver, and the physical demand will overwhelm them now. That's the big risk. And I know the prices, especially for silver, will have to rise significantly. Just like what happened with the palladium price. There's one great example which actually tells you how this will play out, and that's palladium. Palladium is a very small market, just like silver. Palladium was managed, manipulated for years, just like silver, just like gold, just like platinum. If you look at the concentrated short positions, palladium was among the largest position relative to the size of the market for years. Then the physical demand became so large that it overwhelmed the paper shorts. This happened in 2017, 2018. The paper shorts, they had to deliver physical palladium, and they couldn't do that for that price. So palladium went through the roof. The palladium price went up fourfold, and the palladium shorts decreased their position until they were, well, relatively normal. The price of palladium went up 4x between 2017 and 2020, and this was due to the fact that in the car industry there was a shift from combustion engine vehicles towards the hybrids, and in the hybrids you need palladium for the exhaust system. And this is all a little technical, but it resulted in a huge shift in the market, that there was more platinum needed than was more palladium needed in the exhaust systems than platinum, and that caused a squeeze in the market, a physical squeeze, and that's why the shorters, they really had a problem. This was all 3 years ago, so before Corona. But this is a great example. It's a great playbook for what can happen to silver, and I think what will happen to silver, because central banks can solve each and every crisis, but they can't print silver like they couldn't print palladium. So you can't solve this problem. Most people think that the pricing mechanism for a metal is the physical supply and demand. That's not true. The physical trade is only 1 or 2% of the trade. Most of the trade is done on futures market. That's the paper selling. So if you sell enough silver on paper, you can bring the price down. That's what just happened again in the last few days. The SLV needs to source its metal. And there's another great ETF, that's the Sprott ETF, the PSLV. And the PSLV, if you study the history, it has been quite clear, and Eric Sprott has been very vocal about this, that it could take months for them to get enough silver delivered. I think within the SLV, some tricks are being played, because the amount of silver they need to fund now, it's physically almost impossible to get that many extra ounces of silver within a short time frame. So you see all kinds of leasing constructions, and I don't know the technical details, but this game can't go on much longer. They've been able to manage this market for decades, and I'm afraid that the palladium scenario will now be unfolding, and that's very, very risky for the financial system as a whole, because palladium doesn't play a role in the financial system, and silver isn't not playing a role in the financial system. But if silver breaks, then the gold manipulation might break as well, and then you have a real crisis within the international monetary system, because then the dollar system is at risk. And that's what my book is all about. And try to buy any silver in size or even small quantities is not available. And now what they're doing, they push the price down again by selling paper silver. So the paper shorts is increasing. But the lower the price goes, the more physical demand there is out there. So the problem hasn't been solved. Just try to scare the market. The bullion banks who have been working as a cartel for decades, because gold and silver are the anti-dollar. You know, the dollar used to be backed by gold, but in August 71, President Nixon, he closed the gold window. So since 1971, gold and silver are the enemy of the dollar. And of course, the US wants to support the dollar system for as long as possible. So if they let silver and gold go much higher, that's a huge risk for the dollar system. And since Corona, the money printing has started to become so insane. Over 25% of all dollars created were created in the last 12 months, that more and more people are starting to begin to understand what's the problem in this system. What I always say in the big reset, we need to find a new anchor for world's financial system. So we need a successor for the dollar. And that's what also Mark Carney, as the central bank or the Bank of England governor, said in Jackson Hole in 2019. We need to find a new anchor for the world's financial system. We need debt restructurings. That's another part of the book. So we need to find a solution for the mountain of debt. And I also have the thesis worked out in my book that there will be a revaluation of the gold price. There will be a revaluation of gold because of market forces, like we see now in silver. Demand will overwhelm the supply, or central bankers might decide to revalue gold much higher, because that can be a way to solve a possible crisis around the dollar as well. We've seen that in the 1930s as well. There was a gold revaluation in the 1930s to solve the crisis. So a revaluation of gold and silver are coming. We're in the process of that, as you see with silver. And I think gold might be reintroduced within the financial system, and maybe the next world reserve currency will be gold linked, but I don't think we'll go back towards a full gold standard again. But it's very clear that central bankers are working on building the foundation for a new anchor for the international monetary system, as the Bank of England governor proposed during his speech in Jackson Hole 2019. To avoid a possible dollar collapse, central bankers need to take the initiative. And I think the US understands this very well. The US might take the initiative together with the IMF to propose to move towards the next phase of the international monetary system. Without gold, without a intrinsic backing, all paper currencies in history have failed. So we know from history 250 currencies which weren't backed by gold or anything else, or silver, they all failed in the end. And we're now in the process of debasing all our currencies worldwide, and people are beginning to move. They're buying Bitcoin. It explains the rise of Bitcoin. They're buying old paintings, old cars. They buy everything the government can't print, including real estate. And once the pressure becomes too large, the central bankers who know this very well, who know this history of fiat money very well, they will take the initiative again. They won't wait for a full collapse of paper currencies. They will revalue gold or do something else to save the system.